What's going on, everybody? Chris here. We're going to be talking about the Covey portfolio performance. So, right now, I have no idea what kind of standing I'm in because I was first place and then I dropped to 35th place when the CPI came out. And then once the CPI passed, and it was the Fed's funds, and then the preceding days happened, I started to go back to instead of 35, 25, 14, 5. So I started jumping up the ladder of the rankings. This is the current rank before the weekly close. So when it comes to Monday or the weekend, that's when they calculate everything. I think the computer has a schedule of when it calculates the ranking. But so far, like I'm doing really well. 78% total gain, 44% monthly gain, 15% today's gain. So I got 15% on today's gain, and my performance is an all-time high for the account. 1.77. The guy that I'm most worried about in this competition, his name is Mark. And then the guy before me, a Boom, his is really interesting. I'm really curious to see what his performance is because he had like I don't know a huge 56% in one day. Now it's 12. It's not that big. So, I beat his performance for today. So he had 12. I had 15. So I'm beating this guy, Boom, with this really crazy levered SP500 short. Oh, he cut his active positions. I don't know. I think he's just trading. So it's really interesting because he had like a whole bunch of stuff. He had like uh, leveraged ETFs unstacked upon each other for shorting tech, Nasdaq, and then also the SP500. 3x, 2x, regular. He had it all stacked just for that. And he says he's a quant. Looking to start it. So I don't know. Maybe he's really young, but I'm beating him. So best of luck to him. And then this is the guy I'm worried about. 197% total gain. He's got a really good record of 30% monthly gain, and he's got this. Looks respectable. This is difficult, starting all the way from June. I guess you could argue it didn't really start growing until maybe October, so it's roughly similar to mine. Mine started late November, November 10th. So I'm not too far off on a similar footing. He had a chance of shorting crypto. I think that's what this move was. He shorted crypto and did really well. And this guy, for the most part, I respect him. Like as far as like a threat level, this is the closest as it comes. When I have to kind of watch the rankings, but Mark is a solid guy. He consistently has a high alpha. This guy, green blue, like I don't know it. I don't know how he has a high alpha, but it's whatever. It doesn't look like a super big threat. I mean, he's got these rankings. Like I don't even know what that is. Investment league. So he's part of the investment league. Uh, investment league. Invite only. So very interesting. We'll see how it goes. But right now, I feel like I'm in first place. Just the way things are. 15% on today's gain, 44% monthly gain. I think I have the highest monthly gain. Let's see, a Boom. Let's check the top 5. I think I have the highest monthly gain so far. Like monthly gain of 44%. Mark my words. Maybe it's too early to say that. 37% from Mark, 10% from Pato, Alpha MD, 48%. Let's see. So this Alpha MD, he's got 40% monthly gain. But the thing is, like his inception over time just doesn't show it. It just looks like he's got too much drawdown in there. I have drawdown too. This one, he had a huge drawdown, but nothing like these guys, and he just never really recovered. Like Mark is the only one that has a graph that's like up and to the right. That's similar. Like and that's above one. Like above one is like you're performing well over the inception of your portfolio. You start out at one, so when you're able to get it over one, and like Mark's got it at like close to three. That's like really respectable. That's super hard to do. That kind of consistency where you can keep that thing over two or around three. That's really good. I guess that's like three times the portfolio. Like I think two is like two times the portfolio. But yeah, it's really difficult. So lots to just kind of see what happens this month. Maybe I get the first place on those tokens. That would be cool. Just because I really believe in this project going forward. Obviously that's not speaking about all crypto or the current state of crypto, but in terms of just what this guy's doing with finance and just really disrupting either passive management or active management, like this could be the one that disrupts the finance sector. So I really believe in that, and I'll continue to make the performance high to where it can be that, where it can be a disruptor for the sector, for finance. Ninja portfolio performance. We're gonna get to that and see just how things performed. So Ninja, we're going to go to the summary performance. So there's a lot of data here. All you need to do is focus on this top left. I found it really hard to kind of filter out just what I don't need. Let's see. I mean, it's got all I can't filter out the accounts. Summary, currency, like. So it says my cumulative net profit is for this. So if we open up maybe the week, cool. It'll show the cumulative net profit. Let's just open it up for the week. Okay, so we could see on the cumulative net profit. Let's see. This is the profit for the week. 50 grand. Roughly got close to 48 grand, 50 grand. And basically that got made in one day, and then I think lost a little bit, made a wash now, and then just pull back a little bit today. I told myself I wasn't going to trade today, and lo and behold, I did it. But I was like, you know what, this time I'm actually going to do the smallest size I can do. And that's what I did, and I tried it, gave it my best shot, and realized, yeah, I was right. I shouldn't have just traded today. But this thing is like the loss was super small. It was 1% of 7,000. My trailing drawdown. Let's see. Yeah, it was $75 was the loss today. So, out of 50,000, $75 doesn't sound that bad, but it's about the trailing drawdown. The trailing drawdown is the thing that'll kill me, so I have to be really on guard about it, because you just never know what's going to happen. But at a glance, this is kind of the summary of the performance for this week. It looks very shocking, but there's 6 accounts, and I think we could show. I don't know. I don't think we could show it per account, but basically, there are 6 accounts, and each account made 8.7 grand on Tuesday, and then on Wednesday, which is the 14th, there was a loss of $1 grand per account, so 6 grand roughly, and then on Thursday, when it came out to be, so Wednesday was the Fed funds, Thursday was the day after. I think it was when the Lagarde came out to speak, and I started off bad, and then I was able to not only um, make a wash and come into net profit, but I did so well that I made a wash of Wednesday's performance. On Wednesday, I made the error of manually trading, and the problem, I don't know, like being more mechanical helps with my risk management. When I listen to Larry Williams on the Sunny Hero Show podcast, he says like they're trying to go, break away from being so mechanical. But for me, with my risk management, the best way is just to be more mechanical and let the bot do my entries. If it doesn't get in, then don't do it. Like I got an entry bot, but that's the best. That's all it's used for because bots are they're not smart enough. You got to use the best bot is the human being, and that will be forever true until AI is here. And inside the finance, in the in the trade, AI, unless AI there's an AI bot that trades, the best bot will be a human. So the best way to go about is buy then build. Buy, and then you build upon your results and figuring out like a scientist what builds the equity curve. But breaking it down by number and net, this is we'll start on Tuesday, which is the day I traded on the 13th. So that one on net was 49 grand. Gross profit was 55 grand. Gross loss was 6 grand. On the long side, there was so this was CPI day. Made a net profit of almost 3 grand, and then on the short side, made a net of 46 grand 400, which came to a total of 49 grand in one day, and for each account was around 8.7 grand. So and there's 6 accounts. All right, moving on to the blunder of the week, which was Wednesday, where I manually traded. And, I deserve the social shame for this because this was pure stupidity. And I traded outside the open range breakout. And I traded into the close of New York session. And the liquidity, the footprint was super thin. Even though the market moved really quick, like it was moving and it felt like there was a lot of buyers and sellers. When I looked at the footprint, it looked like it was dead. Like it was like double-digit footprint numbers on the bid and the ask, and it was look, and there was like no what's it called, delta imbalances. And so the bot didn't get in, but I FOMO'd super hard. I'm like, oh, it's moving. I'm going to miss my move. And I started doing manual entries, and that's where it killed me, and then it went against me. And the E-mini contracts are super leveraged. It's like $12.50. It's like 10 times the micro. So the E-mini is $12.50. The micro is $1.25. And per tick move, it's a lot. And, like I don't know how many ticks, but my 2-to-1 is 15 and 30, and that's kind of what the 15 and 30 is what helped me get positions in, and then I just kind of extended the reward. Instead of 2-to-1, it became like 10-to-1. But when it came to the manual entries, like I was so desperate, I even did a naked no stop position trade. It was so stupid. I don't know like what got into me where I wasn't even watching my risk. That's basically what a stop loss is supposed to do. But I got to the point where I lost almost over a grand per account. 6 accounts, so it's roughly, so there's 6.7 grand loss. So it's a little bit a grand and some change per account. But I earned that shame. Like that's totally like stupid. I shouldn't have been doing what I did, and I need to have extreme ownership for that. And then Thursday was a total wash, gross profit. So I made basically 20 grand, but then I was in the beginning. So this was kind of what led me down some research. So in the beginning, I lost almost 2 grand per account. That's kind of what the 12 grand stands for. It's almost like 2 grand per account loss. And then I came back and made 20 grand, and for a net gain of 7.7 grand, which became a wash from yesterday. So a net benefit of just like $100, like on compared to Tuesday. So basically, Thursday washed out Wednesday with a couple hundred on top of the 49 grand. But yeah, like the research that led me down was to figure out, okay, how do I make sure I don't have like a huge string of losses on the open range breakout? Because I think it was a whole bunch of fake outs. And I think I'm coming up with a process. And one is that, like, being able to discern the chop to where the trend bot can actually make money, and doing that with bounce bands, and then auto squeeze breakout indicator from Oasis Trading, and I'm using that on the 5 minute and the 12 hour. The 5 minute is I'm able to see just when not to even trade until it breaks out, and then once it breaks out, I'll look for entries. But I think that's, for the most part, that's it. And for the H12, that's more of looking to see if it's going to be a trend day or like a really tight, choppy channel day. And that's when I would change the settings from trend to reversion. But mainly it's just figuring out when to not trade and when to trade, and to allow the entry bot to start doing its thing. But for the most part, it's kind of difficult because it's something that a bot won't be able to do, because I'm doing like multi-level kind of conditions on top of each other for either bias for the day, or when to actually, when the data is clean, to be able to actually enter the market. So that is like the performance for the Ninja portfolio this week, with a net on the week around 49 grand, which is really great. And as far as like the push towards the goal, I think it's roughly 20%. I'm 20% of the way to my goal. In order to pass these evaluation accounts, you need to have 20 grand in profit per account, or per contract. And there's 6 of them, and roughly I'm at, I think, 3 grand per account, like around 2 to 3 grand per account. There's one account that's got 5 grand, and the rest is around like 3 or 4. It kind of varies. Even though, like, I have a trade copier, there's some that are better off than others. Weirdly enough, I think I'd make it attributed to the bugs. Weekly closing thoughts. So weekly closing thoughts. It was a really big week. Lots of news, whether it's the CPI Tuesday, Fed Funds Wednesday, and then pretty much the rate hikes for the Eurozone Thursday. But we take a look on the week. So if we were to remove this moving average channel and allow us to just kind of see the overall picture, these are just moving averages. This red one is the 24 moving average. The blue one is the 150. And these are simple moving averages. And the teal turquoise is the 72. And it's roughly it's not to trade off of course. It's more just to see an overall bias. So right now, because we're underneath all of them, the overall bias is short. Now, even though we came above all of them, I never got bullish because I believed it was a bear trap or a bull trap. It was a bull trap, and it is so. I mean, the close on the week down below all of these moving averages confirm that was a bull trap. And one way I avoid bull traps is I use a moving average channel. So this is the fast version. But if I do this version, I'm able to see where the bull traps are. All the traps are inside the moving average channel, and it was totally a trap. Based on the fundamentals, you want to make your decision based on the fundamentals, and the fundamentals are bearish. The economy looks sick. Most of all the liquidity and macro indicators, liquidity indicators, the banks are safe and liquid. The consumers are buying, safe and liquid. Basically, they're not taking all risk. The businesses are not taking on risk. They're actually trying to de-risk. And Treasury, as far as the bond people, they're trying to de-risk, and actually looks more fragile. Commodities, it's coming down, and it's moving towards risk off. So lumber is down, gold was up, but in terms of the ratio, gold is doing better than lumber. But for the most part, like when we look at just the overall sentiment, it just doesn't look good. It looks fragile. It looks like it's about to break. Period. So the overall analysis is if we were to do the replay, so this is pretty much where we around Tuesday. So Tuesday, this was good because this was support, and we were testing these to see if we can break out, and it failed on that day. We moved to Wednesday, got rejected, and Thursday and Friday. So this is Thursday. We closed below the 150 and the 24, which was a big deal because this flipped this support into resistance. And then we closed the day on Friday right there. Underneath the teal is the 72, which really confirmed the bias for the short side, that there's more to come on the SP500. And that's on a daily closing basis. On a weekly closing basis, we flipped this flip from resistance got flipped to support, and it was acting support for this week and the week before us. But this current week, I'm speaking on Friday, 5:58 p.m., it flipped to resistance. So now there are more bears piling in. Where the bulls were, and the bulls up here are trapped. And now we're going to go test weekly demand at support down here, and we're going to see if that holds. And right now the momentum is going to start picking up to start testing these levels before you believe it, or before it's before you know it, we're going to be punching through all of them, because like the year just does not look good. It looks sick. The economy looks sick. Everything looks sick in terms of like economic wise. And you saw from my performance, you could still make money. You just got to be able to have the chops to do all that. And if you asked me how do you get the chops to do all that, I wouldn't be able to give you an answer. Because I would say, start looking at my index, like bit.ly/Chris index. Like that's where I'm trying to document like everything I know, and that's just the best I got right now. Like if I were to make a course, well, I mean technically I already have one. I've recorded most of what I know in terms of index format and with videos, so you don't need me to be there to be able to just kind of understand how I do things. So that's the S&P 500. The last thing on the S&P 500 I'm going to talk about is this MACD. So the MACD is a momentum indicator, and we were looking on Wednesday and Thursday on the daily here, and we totally crossed it down. We even had a daily breaker on the market structure. So it really showed today. And then here, we're about to have a cross on the MACD on the weekly. So this is like really important. So people ask, when is the bottom coming? Or when is that next leg to the downside coming? And I think the answer lies in this line crossing on the weekly. And who knows, maybe that's this next week or the week after, but it needs a whole week to be able to cross and for the price to go down low enough. If we catch some kind of bid tomorrow, no, next week, to where price does an inside bar, it's kind of contingent on an outside bar on the week, especially on the close too. So we need another down week close in order for this to start catching steam. So we next week would be the week before Christmas, and you never know. It might go into January. So it's really hard to determine this, but it's really close. Like, it's as close as it could ever be. Now, if we were to look at the money flow index of the institutions, last I saw, they're trying to go long. So when we go over here to the money flow index, it's over here in the left column. So we can see that the institutions are looking to go long. Honestly, if I were to figure out where they're going to try and long, I like the moving average channel 10, and I would say it's right here. I would say right at weekly support, they're going to try and long, and that's where I would. If we go here to the daily support, it's really close to that weekly support. So we could, right around the daily support or the weekly support, I would try to long, and I think that's kind of what's common. I think institutions see that, and that would prevent a huge momentum of the downside. But I do believe it's coming. It's just it's taking its time. It's figuring out which week is it gonna be, right? But it looks like it's coming. But following the institutions and what they're doing, let price come test weekly support and daily support, and then we're going to try and catch a bid, and that's going to be what we're going to use for the trade plan next week. Part of the trade plan for next week on the SP500 is using this trend line here on the 8-hour. So if we were to isolate this, there was a really good play on this trend line. We had a 8-hour bar close right underneath it and had made a doji, and the next 8-hour bar was a really good entry to the downside, and it played out really well. I made 10 grand off of that move, but that account got wiped out because I was trading manually. So that how much of a bad thing that is. But I was trading manually, and it kind of blew those two accounts. But made 10 grand off that move. So now we're looking to do it again, right? The main thing was we're looking to do it again. So now this is the line that we want to see. We want to see some kind of small interim rally into this line, and then we're looking to short off of that line. And especially, I don't know, we'll see with each 8-hour bar that comes in, but we're looking to short off of that resistance, that break of that trend line. And we're looking to take price down to daily support or weekly support, whichever comes first, or this moving average channel low. But that is the SP 500 on just what I got for you. As for everything else, I'm going to have to just cut it short just because I don't have time for everything else. But as far as just a weekly closing thought on the SP 500, that's it. And stay tuned for the rest of the list, and I'll be able to provide a video to where we break down each one on top of the SP 500 and just kind of what we think is going to happen.